Chapter 10 Valuation Concepts. Learning Objectives. Explain how bond prices are determined and stock price or values are determined under different growth assumptions. Explain how yields or market rates for both stock and bonds are determined. Describe the relationship between stock and bond price and market rate of return. Identify factors that affect the price of stocks and bonds. Basic valuation. The value of any asset is based on the present value of the cash flows the asset is expected to produce in the future. Valuation of bond. The bond value is the present value of an annuity of interest plus present value of a lump sum payment at maturity. Yield to maturity. Yield to maturity is the average rate of return earned on a bond if it's held to maturity. Approximate yield to maturity can be calculated in the following equation. Stock valuation models. Stock values with zero growth. A preferred stock is a zero growth stock whose future dividends are not expected to grow in the future. The price of a preferred stock is the dividend divided by the required rate of return. Constant growth model is also called Gordon model. The price of common stock will be the dividend at the end of the first year divided by required rate of return minus the dividend growth rate. Key valuation concepts. How are bond prices determined? Computed as the present value of the cash flows the bond is expected to pay during its life. The value of a bond is based on the interest payments and the repayment of the bond's principal value. How are stock prices determined? The value of a stock is based on the dividend payment that the stock is expected to generate during its life. Dividend discount model shows that all future dividends are discounted to the present period to determine the stock's current value. What is the relationship between stock and bond prices and the market rate of return? When market rates increase, the price of both stocks and bonds decrease. To earn higher rates of return, investors lower the prices they are willing to pay for their investments. What factors affect the prices of stocks and bonds? The price or value of a stock or a bond is determined by two primary factors: the cash flows the asset is expected to generate in the future, and the rate of return that investors require to invest in the asset.